guys, welcome to Money Control. I'm Karunya Rao. With me is Manisha Gupta. It's 1 p.m. and as always, we are tracking commodities for you. Yesterday, we did Chai Pe Charcha about soaring tea prices, and today it's all about metals, especially with the focus on aluminium. Manisha, yes, just a couple of days back, we were talking about how copper and aluminium demand will continue to stay strong. Can you tell us why, aluminium specifically has seen a dip in its prices, especially if we compare it to the last 1 month?
Oh, well, absolutely, Karunya. Copper is trading at a 4-week lows and aluminum even further down at around 2-month lows. When you look at the copper prices from its all-time highs of around $4,100 tons, the current price is at $32.50. So we have seen quite a decline. So this is almost like 15 to 17% of a decline from its highs that we have seen in aluminum. And last 1 month, as you said, has seen 7.5% of a cut in case of aluminum prices. Much of this is because that war premium that we saw coming in for aluminum prices, the reason the prices went to all-time highs, well, that seems to be getting factored into the markets. Also, even as the production has seen a bit of a decline, the consumption also has been hit, especially in Europe. And the reason that you have seen the prices go down now is the demand in China and Japan is getting to be weaker. We have seen the physical premium in Japan actually come down. The Chinese production has seen an increase. So has been the case in Europe as well, which is in thick of action, and the energy price is still on the higher side. But some of these smelters have restarted their production. Far and few and partial restart here, but yes, with some of this coming back on board, especially from Europe and China, is the main reason actually that you have seen the aluminum prices come off its highs.
So what will be the impact on India, especially Indian companies, the likes of Nalco, Hindalco, because they also saw a good run up in the last few weeks. They're trading quiet today, but tell us what is the forecast there?
Well, the expectation is that you could be looking at further decline in many of these metal prices because the kind of war premium that we saw in here seems to be wearing off now. And as I said, the production has been increasing. Actually, today you have had the Aluminium International Institute data come in, which shows that in Feb, the global aluminum production was 5.11 million tons. In March, it is now at 5.69 million tons. So there is an increase in production. Same is the case in case of the Chinese numbers, from 2.94 in Feb to 3.29 in March. So there has been an increase in China as well. Chinese exports also have seen an increase there. And the expectation is that with the US dollar rising, which is trading at a 2-year highs right now, and with the fact that the first week of May will show you an increase or a aggressive rate hike coming in from the US Fed, also will weigh onto the markets here. And when you look at the speculative trade, well, you are looking at long positions being winded. So that closing of positions is going to be yet another reason that is leading to decline in many of these metal prices. The view from here is that even as we have corrected anywhere between 8 to 15% for many of these metal prices, there is still some correction that you can see, especially for copper, aluminum, zinc, etc. Another 8 to 10 to 12% of a decline in these metal prices from these levels is expected. So that tells you that that phenomenal run-up that we've seen in many of these metal prices perhaps could see a hold or a pause at these levels. We have seen some decline in Nalco and Hindalco today, and some more decline is what you can expect in the days to come. But mind you, this is a correction. There will be a rebound when we see the prices coming at a fair level.
I was just going to ask you that. Is it a correction phase? Has the bull run come to a halt that many of these metals have seen? But you've answered that for me. Tell me something. Just last week, things were looking really up and running for the entire metal pack, especially aluminum and copper. You were also saying that you're hearing the, good feedback, good commentary as far as the outlook is concerned for both of these metals. But what happens now? Is this a good time to perhaps lap up some of these commodities, or should one wait for further correction, like you said, which could happen in the next few weeks?
So, as far as investors are concerned, they will be lapping up at these levels. People who want to start restocking will definitely be getting into the markets. And I remember, Karunya, last week when we spoke, I spoke about copper and zinc as buying and not aluminum, because this is a third straight week that we have seen the aluminum prices continue to decline. It has been falling on a week-on-week basis. So, for people who still want to buy metals, because it's not going to be a one single line of a decline here. You still have a better advantage for copper and zinc prices there, not for aluminum at these levels, because we are looking at increase in production. The data has just come in today, and it shows that whether it's Africa or whether it's Europe or China or Japan for that matter, the major producer and consumer countries are not showing a lot of bullishness or excitement right now when it comes to aluminum, and that could be a bit of a decline. One more factor I remember that we spoke about was the fact that Australia has banned alumina exports to Russia. So that was almost to the tune of 1.5 billion tons on an annual basis. Now, if that doesn't go to Russia, Australia is going to send it somewhere, sell it someplace, and that is coming into the international markets then. So that quantity also is available in the international markets. I think that could be yet another reason for aluminum prices at least to be under pressure. But copper, as we've spoken, trading at a 4-week lows, could see a bit of a rebound. Zinc recently touched a 16-year highs, has seen correction from those kind of levels. Could be looking at some buying because the steel prices or the steel demand is quite strong, but aluminum still has a bit of a decline remaining.
Okay, I stand corrected. It's zinc and copper which look attractive and interesting even at these levels after all the correction has happened. Just one last question, Manisha. Right now, of course, there are some intermittent lockdowns we're seeing. The demand also is muted for many of these metals given, supply shortage when it comes to semiconductors, etc. By when do you think demand picking up for most of these metals? Because right now, yes, they have cooled off, and it was expected because of the run-up that they saw after the Russia-Ukraine crisis. But is there any forecast, any projections by analysts and experts about when metals will once again witness good, meaningful pickup in demand?
Well, for that, we'll continue to, watch out for the demand figures itself. But I can tell you one thing, Karunya, that the minute or the day China comes out with more stimulus for its slowing down economy, for the property, infrastructure or manufacturing sectors, I think that day you will see a huge run up in metal prices. So, well, yes, it's a day-to-day kind of a market, but structurally we are in for some correction. But yes, this is a market that comes with lots of ifs and buts. If this happens, you will see a run up. But if this doesn't happen, so yeah, that's how we are riding this market right now. So I will watch out for China because they have an ultra loose monetary policy. So is the case with Japan as well. So these two countries, if they come out with any more stimulus, you're looking at metal prices running up yet again.
And that could literally happen any day given the historic trend that we've seen from countries like China.
Yes.
On that note, we'll wrap up today's chat on commodities. All eyes continue to be on aluminium, and definitely zinc and copper should also be something that you should keep on your watch list. Thank you guys for tuning in.